Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today we're going to look at a video on how the housing market is kind of not looking too hot, as is American finance. And I think we're about to have a financial meltdown. When I say I think, I mean, yeah, I'm pretty confident. This is a problem.
Really? I look forward to hearing about it. If you, like me, enjoy this kind of entertaining stock market content of two stupid guys trading stocks and talking all things personal finance, by all means, give us a like and subscribe below. We'd love to have you along this little adventure of ours. With that, we'll get to it.
Two Stupid Guys Trade Stocks. You want to explain this?
No, the scene, yeah. I mean, The Big Short, great movie. All right. This is when they go to a neighborhood and they realize that the neighborhood is empty. It's just a bunch of empty houses being foreclosed upon, people paying rent, and no one, the landlord not paying the mortgage. This complete and utter disaster from The Big Short.
Yeah. So essentially, this started off with me looking at just kind of one aspect, and then this video kind of changed as I was realizing stuff. But it started off with the Bloomberg article. Now, when it says the nice household, that's the name of the family. So it's just
Oh,
yeah,
that makes sense.
it was very misleading at first. Um, but yeah, so essentially, one in about 20 million houses across the country, or one in six homes, have fallen behind on their utility bills. Okay,
Yeah.
it's the worst crisis ever documented by.
Yeah.
What's up?
Burry tweeted out this article too.
Oh, did he?
Yeah. I was
Yeah,
just thinking, I was like, wait a minute, I read this article.
yeah. It's not good. It's a problem. It's definitely it's not good because it's literally the worst one that's been documented, and it just gets worse. Let me minimize you here. So December 2019. All right. This is where we usually sit at around 8 billion in debt. Okay. Now we have the December 2020, December 2021, January 2022, yada yada. But it usually goes down the first part of the year. We're hanging out above about 80% higher than we usually are. Just steady. Okay? This is a problem.
Wow. And this is U.S. where we haven't seen the level of energy like price increases that they've seen in the European like theater.
This is US. I did not even get into Europe because it doesn't directly affect us. We're having enough problems, as you're about to see.
Yeah.
So the senior attorney at Center Biological Diversity essentially said, I expect a tsunami of shutoffs, right? We're already dealing with increased inflation in every area. Like ridiculous inflation. Like cost of eggs. What's happening? Okay? It's stupid. All right?
Chickens unionized.
Yes. But the average balance owed is climbed almost 100% to 792. Right?
Wow.
Now, 792 may not seem like a lot, especially just for utility bills, but that's just electric, right?
Yeah.
There's other problems. All right? Now, I was kind of looking at this and I was thinking probably a lot of people took advantage of low interest rates because they dropped so hard. They're probably thinking, well, now's the time to buy a house. The problem
Yeah.
was the market conditions during that time were so horrible for buyers that people were doing just extra cash, also waiving inspection. Worst thing
Yep.
you can do. Horrible
Hmm.
idea, right? I
Yeah.
bought a home a little bit after this time. I refused to waive inspection. We put offers in multiple houses and be like, waive inspection. We're like, cancel my offer. Not going to do it. I just won't
Nope.
have this house. This is just an example from a New York Times article. They set out a 3 bedroom for in Seattle for 900K. They then 1.45 million, best they could find, and now they're screwed.
Yeah. Talk about being house poor. I can only imagine what those mortgage payments look like. That's going to be insane,
Yeah,
even at
granted,
3%. You know.
this lady in the article had said, so she's not a normal American. She had said, I've already lived my life, right? I've had that craving for pasta, so I just went to Rome for 3 days. So she's not the typical American. Yeah, I know.
Wow.
What? Okay.
Yeah.
Just
Bougie.
go, just go to Olive Garden. But so then I kind of looked at this. I'm like, all right. So if people overextend houses, now they can't pay utility bills. AT&T released that people are behind on their phone payments. How are credit cards going? All right.
Yeah.
So half of Americans need credit cards to cover essential living expenses. It's horrible. That is not good. Okay? 45% of Americans have taken more credit card debt during the pandemic. And individuals who carry a credit card balance from month to month are more than twice as likely to report having debt more now than before the pandemic. And to me, this is the scariest one. All right, let me shrink our faces here. 57% of Americans have missed at least one credit card payment. All right, now 37% was simply forgetting. That happens. But the next common reason was paying for food. Like, yeah. We've all missed it.
That's scary. Fortunately, it was like almost 7 years ago now, so it's about to fall off my thing. But yeah, I completely forgot for like a $40 payment or something ridiculous like that. But yeah, that is a scary thing. Like, I don't know if you've seen the chart of credit card debt levels. The initial portion of COVID, no one was going out, no one was eating out, no one was traveling, and we were getting all those checks from the government. So credit card debt dropped significantly. But it's now recovered and it's taken back the previous highs. It's taken back off the chart. It's insane in terms of credit card debt. And when you're financing basic necessities at a 25% interest rate, that's just insane. There's no way you can dig yourself out of that. Once again, negative amortization. It's a great term. Look it up. We talked about it earlier in the student loan video, but it's a scary topic.
It's terrifying. And the thing that, what's that channel? So for those of you who don't know, I did a market analysis video. I made the 200 SMA here blue to make it easier. Saying that we're going to butt up against the 200 SMA. We're not just going to push through it. We're probably going to see all-time lows. Not all-time lows, my bad. Revisit 365 on the SPY. What's that channel who said the exact opposite?
It was Game of Trades.
Game of Trades.
Game of Trades. I mean, I enjoy the channel, but there's a 200,000 subscriber channel, and he talked about how we were going to bump against 200 SMA. We were going to break out, and he was talking about the historical rally after that being, I think it was in the 20 to 30% range. Like a blow off the top kind of like move. I was skeptical of that, and it doesn't look like that's materializing from what we've seen so far. And that was never Dylan's prediction based on the charts and technical analysis. But
no, I'm right. Which, by the way, I'm not shitting on the channel. I actually enjoy that channel. So everyone has different opinions. That's fine. But the reasons that people are thinking it's going to go up, they're just not looking at the average financial health of a regular American, right? Everyone keeps on saying labor market, whatever. When you have a shrinking labor market, you're going to have more jobs. That doesn't mean that everyone's healthy. When you have 64% of all Americans in the labor force, and then after COVID, 62.
Yeah.
You're going to have
shrank.
Yeah. You're going to have jobs. I have Burrito Express right across the street that closed at 3 because they can't get anyone to work after 3. Like, what's going on?
Horrible. No burritos for dinner, man.
It's a big deal, actually. Hold on. That one's important to me. But you can see we butted off this kind of 420 level real hard after hitting the 200 SMA. I don't think this is going to stop anytime soon. And I'm not a fundamental guy. I'm a chart analysis guy. But when I look at fundamentals as an opposing view to Game of Trades, is it Game of Trades?
Yeah, Game of Trades.
I don't understand how it's positive. You have people with less and less money spending, getting more and more in debt. I don't get how that's good.
Yeah.
But
I try not to get sucked into the doom and gloom, because over the long term, right, the economy endures. Things never turn out to be as bad as they initially seem. But there's enough headwinds here that there's no way you could justify paying these historically above trendline prices, and the market needs to come back to some sort of reality. I'm not saying we have to undercorrect and get into the point where we have amazing deals out there again. Hopefully we do, as someone who would like to invest more.
Yeah, sounds great.
But we need to get back to a reasonable reality. There's no way we can support this elevated thing, kind of valuation metric compared to normal historical Buffett value indicators, when you have so many headwinds. American consumers hurting, their sentiment's negative. You have inflation still running rampant. You have Powell telling you that there's going to be pain in the economy coming. There's a lot of stuff here that is telling you that over the next 12 to 18 months, there's probably going to be a lot of buying opportunities, but there's going to be a lot of pain in the interim.
Yeah. I think we're going to be going a lot lower here. I have no idea what's going to happen to the housing market as interest rates start hitting 8, 9, 10% for a mortgage. So that's going to be real interesting. I am
Yeah.
not experienced with that, so I don't know what's going to happen there.
Yeah, hasn't happened in my lifetime really either, so I can't speak to it either. But I have to start talking to old people and asking them about what it was like when mortgages were that high.
Yeah, there you go. All right, guys, let us know what you think. Have a good one.
Yeah, catch you next one.